Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco, and my partner here with me today in his beautiful baby blue sweater. Is this from Canada Goose?
It is not, but maybe one day I can afford a Canada Goose sweater.
Maybe, yeah.
A knit sweater that costs as much as a house payment.
The reason why I say it's Canada Goose is because we're going to talk about Canada Goose today. So, you guys are in for a treat. Canada Goose is a pretty good company. I thought I was kind of surprised. Yeah, we'll talk about that. So, like I said, episode 37. Again, this is we have entered into our second phase of our podcast history, where we now talk about companies instead of talking about the fundamentals of value investing, such as how to analyze companies, for example. So this week we chose Canada Goose to analyze. Again, like we said in the previous podcast, we do want to state a disclaimer here that we're not trying to suggest that you should buy or sell depending on our analysis here. What we're trying to do is trying to educate you on how to analyze companies, and by going through this ourselves and you listening, you should be able to pick up some of the cues, some of the know-hows on how to analyze companies, some of the tricks, if you will, in analyzing companies in value orientation. So that is our disclaimer. And you might be wondering, how the hell did you pick Skechers, and how the hell did you pick not Grey Goose, Canada Goose? Hari, do you want to talk about that before we jump in?
Yeah, so I think there's a couple of things that we want to highlight here is that we are picking companies that are not necessarily well followed, that are still very interesting to talk about, because I find that generally value investors find stocks that few people are talking about, and so highlighting companies that you probably haven't heard of or you have heard of peripherally are probably better for you as an investor than trying to find value in companies that are, let's be honest, Facebook and Apple are literally in the front page of the Wall Street Journal almost every day. And so, there's a lot of coverage. There's not a lot of pricing disparity in those things. But, great businesses can fly under the radar just because of, their size. So that being said, if you are interested in a particular company and would like us to talk about it, please send us an email at info@valueinvestor.org. We are happy to look. We can't guarantee that we will talk about it because I can't speak for Becco, but I'm pretty dumb and I don't necessarily understand every business. So if I can't understand the business, it's probably not worth me talking about it. So, so we are going to, when we do pick, it'll be something that we both, typically understand and can be able to speak intelligently for. And that's why it's important as value investors to know your own limitations. Yeah. So what we talk about here is companies that we actually can understand. And even this one is a little bit of a stretch because we live in Houston, Texas. Despite the Arctic vortex that has come through the Midwest, I still don't need a Canada Goose outdoor jacket. But I think it's still important for us to know our limitations as value investors. I think that's actually probably the highest factor in when you making a decision, is that people can tell you something is cheap, but if you don't understand why it's cheap, it's still not worth buying it.
Yeah,
so
that's one of the reasons why in the first question in the value investor checklist is, can you describe the business in two or less sentences?
So what's a great segue, Becco? Why don't you tell us about Canada Goose?
It is a great segue. Canada Goose, let's jump into this. So Canada Goose is a manufacturer as a functional premium brand for jackets, parkas, vests, hats, etc., gloves, shells. These are outer wears for winter season, effectively, and they're a premium brand for it. So think of I think a common comparison would be like North Face, for example. It may be a little bit higher than North Face.
Yeah.
But it would be on the premium end of things. So when you're talking about a price of these things, you're looking at $1,000 for a jacket, $1,300 for a jacket, etc.
Right.
And so they are a premium brand, and they're headquartered in Canada, Toronto, as the name says, Canada Goose. And they were started in 1957. Surprisingly, they have a long history of operating history, which I was surprised by. I guess that's kind of the case with a lot of premium brands. You know, when you think about premium brands, like for example Louis Vuitton or Prada, etc., you're talking about companies that existed for a long time, and that for a long time they've been able to build that brand recognition for a long time. And Canada Goose is not an exception. They've been around since 1957.
Yeah, the typical story with those is it's family owned, and then you know they get a CEO who is been told grow the business, and then they you see them explode over the next 5 or 10 years, as Canada Goose has done. In 2012 till now is where you see an explosive amount of growth for them.
Right. And if you look, Canada Goose, they IPO'd in 2017, and before that, they were a private company. And we'll talk about this further in the management section. But Bain & Company, came out and basically bought the company in 2013. So we'll talk about that later. But they IPO'd to the public market in 2017. They operate in 12 countries. They have both, retail. There are two lines of businesses. Wholesale. This is very similar to what we talked about in the last episode with Skechers.
Yep.
They make the difference is they make their own stuff. About 30% of their manufacturing, they do it in-house with their own manufacturing facilities. And then in terms of distribution and sales, they have wholesale and then direct-to-consumer. And within direct-to-consumer, they have their own retail store and e-commerce. So you got to think about it in that kind of framework.
Well, and interestingly, that all that manufacturing is done in Canada, of that 35%. So, which is, is very hard to do in this day and age. Most things are manufactured in China, Vietnam, that kind of thing. But and they seem to take great pride in that fact, right? That they make everything in Canada.
Yeah.
So
I think that's a great segue into the kind of the competitive advantage, the mode aspect of this company, which is, the brand, right? This is not like Skechers where you are providing good product at a very, very value price range. This is a premium brand that has brand recognition all around the world. So I would say brand is the cornerstone of their competitive edge. Every other aspect of competitive advantage, for example, low cost provider, they're certainly not low cost provider. They're certainly not, they certainly do not have the network effect. What else? They certainly don't have. In the 10K, they talk about their vertically integrated value chain. They talk about the multi-channel distribution, talking about wholesale and direct consumer. I don't think these are not unique to Canada Goose.
Yeah, I think there's a couple things that I found very interesting. So their technology around keeping you warm. They made a point of, that it was developed when the first Canadian mountain climber made it to Everest. Mounted Everest in 1981 or something. So he was wearing Canada Goose stuff. So there's a huge, point of pride in the Canadian, in Canada. Around the fact that this is a Canadian brand. I mean, they even name it Canada Goose.
Yep.
And I think the other thing that I found interesting was, their whole ethos seems to be, in their stores, they really talk about this fact that people will say, I'm an outdoor person. I go out all the time, and I never feel warm until I wore a Canada Goose, jacket. And so there's I'm not an outdoors type of person, but there's a sense of loyalty, I think, to these guys make a product that actually functions when I'm in sub-zero temperatures that I actually feel comfortable in, as opposed to I go, I buy the cheaper brand, the off brand. It doesn't have the same technology that, keeps me warm.
Right.
So I think there's a big if you're very into the outdoors kind of stuff, and I think if you look at like the Winter Olympics, more than half of the people there were wearing Canada Goose stuff, which is a huge. I mean, not overtly, they weren't advertising it, but it was that was something that was really helping them.
Yeah, it speaks to not only the premium aspect of it, it speaks to the functionality aspect of this company.
Yeah.
So the brand and the technology itself is, we would probably say those two things are their competitive advantage.
Yeah.
Okay. One of the things that was interesting when I was reading through this was that they have brand ambassadors to kind of promote this brand aspect of their competitive advantage, and the way they did that was through this program called Goose People. So like Hari talked about, they would select a few people who would wear Canada Goose, and they would do like a short film or short story around this person. How does Canada Goose help them with what they do, and trying to shine light on exactly how Canada Goose is helping their life, framing that in a story allows them to highlight their competitive edge, which is brand, which I think they're doing a great job at that.
Yeah, and I think their marketing is a lot more word of mouth type, largely because of pricing. I mean, the cost was too expensive. Now they have more money to do the advertising, but they were talking about it on this last conference call about people were coming into from various East Asian countries to flying to Canada to buy a Canada Goose thing, they as part of their travel to the Northeast in the U.S. or Canada was to buy a Canada Goose outfit, so jacket or what have you. So I think it's a big thing about their brand, and I would also say, if you're out skiing, the one time I have been skiing, you see what other people are wearing, and so it's a very concentrated type of marketing, right? You have the ability in that area. Where are you going to wear these kind of jackets and hats and stuff is when you're skiing and all that kind of stuff.
Yeah.
A lot of people are doing that, so you can easily see what other people are wearing, and then you ask them, and when you're making small talk with people, that's a huge, tremendous selling point for them. That brand ambassador and being very word of mouth type sales, because this is a premium product. You're not going to buy this 3 times a year. You may buy one every 5 years, but you have the ability to, when you're out there skiing, and then the rest of the year you're not wearing it. So you go and talk to these folks, and you get a good, word of mouth translates very well here. Yeah,
it's interesting. It kind of reminds me of what happened in Korea when it comes to like North Face, for example. When North Face became a huge deal, when I was growing up over there, people would be, man, that looks really good. I want to go buy North Face. So when people travel to outside of the country, for example, to U.S. or to Canada or Australia, they'll go to the North Face store and buy one, and then come back and bring it home and wear it so proudly.
Yeah.
And I think this is kind of following the same trail here.
Yeah.
So if you wear a Canada Goose and you have Made in Canada and all that, if you walk around with that on the streets of Seoul or Tokyo or wherever, people will recognize, oh yeah,
right,
he knows how to dress.
Yeah, exactly.
Yeah, it's interesting.
He has a lot of disposable income.
Yeah, a lot of disposable income.
What it tells you.
Yeah. So I think those are kind of the competitive advantage of the company.
Yeah.
Yeah. They are, in terms of durability. I think that's the next question that comes in the Value Investor Checklist here.
Right.
What do you think about that, Hari?
So it's an interesting thing. I am not. I found it very interesting that they were very concerned about their own brand being diluted by selling too much of it, right? And I think that to me is, with luxury items like this, one of the concerns is that if it's too prevalent, then it loses some of the luster of being premium, right?
Scarce.
Yeah. So there's a scarcity that's associated with that, right? Whereas other less luxurious items can be more prevalent, right? So, the ways that they can kind of combat this are they have like certain types of the jackets or are even more premium than the regular. Like they have a higher end Highline, which is one way to kind of differentiate even within their own brand.
Like a step up from
there's a step up inside the own which I haven't seen them do yet. I think they're still trying to there's an enormous demand for their stuff right now still. So they're just trying to meet all the demand,
right.
And in the various areas that, there's demand for it. But I don't know that there's necessarily like a super strong moat here. I mean, I think there is a moat. I think the brand has to be carefully managed in order to not completely sink it. But I think the next, 3 to 5 years, they're probably not going to, breach that moat.
Yeah.
I also don't know that there's going to be a ton of competition for this, this kind of thing. I think because they have 50 plus 60 years of know-how and how they're making their jackets, there's a lot to be said for that.
Yeah.
Everything I've read about their jackets, because I've never actually touched one or felt one, is the construction, the premium feel, all of that has, a very like, when you're paying for it, you don't feel like I'm getting gypped,
right.
kind of thing, right?
Yeah.
So people don't have that, and I don't see them, trying to cut costs by making it cheaper in Vietnam or something like that. So I think they're going to retain the premium aspect of it, and when we talk about the margins, you'll see how ridiculous the margins are for how much they make. But yeah, so to answer your question, this is not a rock solid moat. They're in a luxury item, premium business. Imagine if in a world where, global warming is, taking over, does that really affect them? I wouldn't put too much thought into that one, but I would be worried about more, what happens if they do sell too much of this, right? And then now you have the premium aspect. Can this thing survive just purely based on the technology inside it, right? Which is keeping you warm and stuff like that. And that's where I'm not sure about.
Yeah,
so,
it's interesting. It's definitely interesting.
So
what
are your thoughts there?
I think reflecting back on what I said earlier about North Face, North Face is, when I was growing up, it was like this huge premium brand that only, people that knew how to dress or, obviously had
right.
money would wear. But now it's kind of all over the place. So, as with anything in fashion, it comes and goes, right?
Yeah.
And so it might be this Canada Goose fever that's been hitting the world as they ramp up their sales, as they ramp up their marketing.
Right.
But once that fever kind of dies down, I don't know. It is a big question mark at the end of that.
And I think that's also kind of why a lot of these luxury brands stayed, family companies stayed kind of small, and they weren't selling tons and tons of these, these things everywhere. Now, I if their claim is true that, this is the only jacket that you'll wear where you actually truly feel warm, then, I think there is something to be said for that, right? That you can survive on that technology.
Yeah.
So the question is somebody else going to think of a way? I mean, when you're selling a jacket at a 75% margin, there are people, entrepreneurs who are willing to attack your moat, right? And try and sell it for a 60% margin. Mm-hmm. So right now I don't see that, right? But it doesn't mean that in the next 3 to 5 years somebody doesn't start seeing that these guys are everywhere and trying to take that moat from them.
Yeah, I think in order to compete in this market, I think in a luxurious premium brand market, another premium brand that is kind of tangential to what they do might come in and introduce a product line here. For example, I don't know. For example, like Nike might. I don't know. I'm just thinking out loud, but
or North Face.
Line
tries to do a premium, line that's slightly different in their more premium than they already do.
Yeah.
I mean, I think there's lots of places to attack them. That's not necessarily just their jackets. I mean, they release this knitwear. Mm-hmm. I mean, these sweaters are like $600.
That's crazy.
So and they
crazy
look
expensive.
really nice, and they're very looks like they're very comfortable and things like that. But I think there's potential there for people to kind of knock into some of those areas.
Yeah, for sure.
So
I think that's actually a great segue into the next part of the value investor checklist, which is the long-term prospects. And you mentioned knitwear. One of the things that they are doing, and I think they're executing it quite well, is the product line that is outside of their bread and butter. Like you mentioned, the knitwear. You can imagine their sales spike up in the wintertime, and then in the fall or spring, it kind of tapers down. It's like a huge spike, seasonal. And then it kind of tapers down. So what they're trying to do is trying to attack those tangential markets in the spring and in the fall.
Yeah.
And the way they're doing that is by introducing stuff like sweater or vest.
Right.
And you can see the last quarter that was just announced in September last year, 2018. You can see a huge spike in their off-season revenue. So they're executing it quite well. The long-term prospect of this is, they're trying to expand their revenue streams into multiple seasons, not just dependent on one season, one winter season.
Yeah, and I think it's also interesting that because now they have their own retail stores, it's not like they just close the store in summertime, right? So they want to sell stuff, and in certain parts of the world, Northern Europe, northern parts of Canada, it's still cold in the summer, right? You're still going to need quote unquote spring wear, quote unquote, so these vests, these knit sweaters, things like that. So they can sell those year round, but not necessarily the parka year round.
Yeah. So in terms of long-term aspect, I think that's a kind of an open market that they haven't tapped into. So it'll be interesting to monitor that. Another long-term growth prospect is the global growth.
Right.
We talk about not North Face, Canada Goose being in Japan and Korea and China, and also in Northern Europe, like you talked about. They're expanding their business not just in Canada but in U.S. but also rest of the world. Mm-hmm. So if you look at a 2018 number, for example, comparing 2016, 2017, and 2018 number, we're talking about a top line here. Canada business grew at compounded annual growth rate of 55% from 2016 to 2018. United States grew at 33%, and the rest of the world grew at 39%. So they talk about this extensively in the annual report. They say Canada is definitely one of the most mature markets. Well, it is the mature market that we are in, but that we are willing to tackle United States very aggressively, and we are ready to tackle the markets rest of the world.
Yeah.
So Pacific Northwest is where they're aiming to tackle next in the United States. They have presence in the Northeast, but they don't really have much presence in Pacific Northwest, which is another big market for them. I think also like Colorado or that part of the world or that part of the country could be very lucrative for them as well.
Yeah, I mean, I think even inside the Northeast, they haven't fully, I think they opened a location in New Jersey and
New York,
and so they've had in the big places, and then now they're filtering it down a little more to the smaller areas. But still, I think there's tons of room for them because they're relatively small in terms of size, relative to what they have. So, I mean, the best kind of growth. The most reliable type of growth is population growth, as somebody, so if you're, what I mean by that is, if your company hasn't entered a market, a new market is always, the best type of growth because you've established everything in your home market, how it works. And if you can see that people are flying in from other places just to buy your stuff, then there's probably a very good chance that it'll be popular in wherever you go. So, but I think one thing that's interesting is that like Canada is cold. It's north of the U.S.
Very white, yeah.
So the U.S. is probably not going to be, long term is not going to be a giant driver of sales. And I think also in Canada, there's going to be an enormous amount of brand loyalty to, they probably buy very little North Face, right? I mean, they're still buying BlackBerry, right, in Canada. So, that's kind of the mentality I think you have to think about too, is that Canada's growth is probably also there's a hometown kind of favorite here.
For sure.
So, when we look at the rest of the world, how do they maintain that brand, right? I think there's certainly, being the only person in Korea with a Canada Goose jacket is one thing, right? That's a status symbol. But then when they have a store in Korea with their price, is it going to maintain itself after you do that?
That's interesting. Yeah, kind of speaking back to what you talked about in terms of scarcity aspect of it. You know, it's interesting how the premium brand and the psychology of consumerism kind of are there. How they are in play here.
Yeah.
But in terms of long-term prospects, like we talked about, I think there's tremendous room for growth. Within the U.S. and outside the country, Japan, Korea, and China. Especially in China, this is something that they are hammering on, as with any retailers, I think.
Right.
Skechers is one of them. China, they look at China as this new growth, giant growth engine. We'll see how they execute, right?
Yeah.
Everyone talks about China being the next growth engine, but in terms of execution, actually penetrating the market, that's another question.
Right.
What they're doing, their Canada Goose, we can tell you what they are doing now to get ready to attack the Chinese market. Is they have selected a president, Scott Cameron is his name, to lead the Chinese effort. They have some presence. Excuse me. They have some small wholesale presence for a number of years, but they're going to open up Hong Kong and Beijing new stores. I'm not sure if they're open already, but they're bound to be open in fiscal year 2019.
They are selling through Tmall.
Yeah, that's
which is Alibaba's store.
So in terms of online presence, they're partnering up with Alibaba's Tmall, starting in 2019, transitioning to online Chinese distribution to Alibaba's Tmall platform in fall of 2019. So that would be a great, that's a great win for them.
Yeah,
to be on their largest e-commerce platform.
Right.
It's a big win. So again, kind of going back to the question of global growth and going back to the question of long-term prospect, I think they have tremendous room to grow, and I think they're poised well to capture that growth.
Yep.
Okay, and then the third point that I wanted to mention under the bracket of long-term prospect is their the channel mix, which I think is very interesting.
Yeah.
This is kind of going back to what we talked about with Skechers. I mean, number doesn't lie, right? Gross margin is definitely higher in direct-to-consumer channel. So what they're doing is they're shifting their focus from wholesale to more direct-to-consumer channel, for example, through e-commerce or their own stores.
Yeah, and I found it interesting, too, when they talked about their own stores. They have this thing called a cold room inside the store, which I don't know how cold it actually is, but you wear the jacket inside the cold room, and then you can wear your own jacket and go in there and see how much warmer are you with their Canada Goose jacket. And I'm like, that's pretty smart. Like, when you think about it, if that's their real selling point, right, which is you can feel warm even when it's cold outside, people are going to pay up for that, right? I think, we've all been there where we're under prepared for some, winter event, and you're miserably cold, and this place is, they've figured out how to solve that.
Yeah.
So, I think that helps drive their business too, is that, when you're a wholesaler, selling through a wholesale channel, you don't have the ability to control the messaging as well.
Yeah, exactly.
You can do it to some extent, but you don't, you can't require the wholesale or the retailer that you're selling to have a cold room or to have a, thing like this. And, the retailer may be pushing a different product, for a different reason. So, for various reasons. So I think this is a very interesting that, and this was coincidence. We didn't pick this because of the fact that they both have, following the same strategy.
Yeah.
Right? But that Skechers and these guys are following it. But I mean, I think it's really interesting that, they're targeting this.
Yeah, it's very interesting. If you look at let me read you some of the hard numbers here. And so if you compare 2017 number to 2018 number, wholesale in terms of constant, in terms of constant currency perspective, from 2017 to 2018, the top line, we're talking about revenue here. If you break it down into wholesale and direct to consumer, wholesale grew at 17.5%. Remember that number. But in terms of direct to consumer, it grew at 123%. So you can see that they are really trying to push into the direct to consumer market. And the reason is, like we talked about earlier, is the gross profit. So looking at gross profit number, in 2018, the gross profit for wholesale was 47%, which is not bad, right? 47% is definitely not bad. But when we look at direct consumer gross margin, 74.4% in 2018. And in 2017, that was 25.5%. But it's incredible the difference between wholesale and direct consumer.
Yeah, they're definitely trying to push their sales through that channel, because I think you can obviously they're making more money, through that. And we're seeing that on the operating margin side. The operating margins have improved significantly. Since they started doing their own stores.
Yeah,
so.
Absolutely. It translates directly to the operating margin from here. So the next question in the value investor checklist is, does this company need a lot of reinvestment to grow? What do you think about that question?
So, for those of you who are trying to understand why we ask this question every time, right? What you're trying to find is a business that has, doesn't have to put a lot of money back in to continue their growth. The like classic example is like a See's Candy, where they were able to grow, over a long period of time, even though they just maintained one manufacturing facility. And so when you look at a retailer like this, are they able to grow their sales, with, without this? And the answer is no. I mean, they are building new manufacturing facilities all over Canada. They are having to spend money to open up stores. So I mean, that's not necessarily a bad thing. I mean, it's just, this is a home run kind of thing if you can get a business that is inherently, and software is a good example of that, where you don't have to spend more money to make more money kind of thing. You can grow your business very elegantly without having to put in more effort. So and these guys haven't been able to if they stayed as a wholesaler, they may have had more leverage in that aspect. Now, what's interesting about this is they're opening up the stores. The stores are doing are able to do much more business than the wholesaler are. So I think it is actually a net benefit that they're spending to make this.
Exactly.
But it's going to require a lot of capital expenditure over the next few years. And we saw this with they bought a shoe company recently to try and help grow a premium shoe brand, and they have also they had a cash offering of where they sold 10 million shares on the market, which is actually, I mean, if when we talk about valuation, selling shares when the shares are undervalued is a bad idea, but selling them when they're overvalued is not necessarily a bad idea. If you're trying to fuel growth. So
exactly. If you look back, starting from like 2015, for example, they've been really, plunging money into their investment thesis, which is, build as many, try to shift the channel mix to a direct to consumer as much as possible. So that's building out the actual retail store, Canada Goose retail store, but also expanding their e-commerce platform.
Right.
So for every country they enter, they have uniquely designed website for that specific country. So that's a capital investment question. Next question is a relationship question. You got the consumer. Do they have a good relationship with consumer, supplier, employees, etc.?
So I think there's, for customer side, is the only one I'll answer, and then I'll let you go on those. I mean, obviously with the brand ambassadors and the I mean, if word of mouth is their highest form of advertising, is obviously the cheapest. I don't see any problems with the customers here. You know, I think it's fantastic for them to, what their relationships are. So, but I do think it's interesting. You know, I'd like to hear your take on suppliers and distributors, because it's a little more nuanced here, I think.
Right. Yeah, when it comes to suppliers and distributors, and I think also manufacturers as well, because they only do about 30% of their manufacturing in house.
Yeah,
they outsource the rest 70% to other Canadian manufacturing facilities. In terms of suppliers, they're really picky about who they pick in terms of suppliers, and this was also the case with Skechers. As I was reading through this. They don't really have a contractual obligation to buy or sell from these suppliers, but I think they have a good long-term relationships with these suppliers to supply really good down the feathers that you need to make these things.
Yep.
In terms of distribution, which is interesting because they still have a pretty sizable wholesale operation all across the globe in 38 countries, and so. Partnering up with really top shelf distributor is very important for them because they want to make sure that their product is displayed in the right way in wholesale. For example, if you walk into Nordstrom in Korea, for example, I don't know if they have Nordstrom in Korea, but for example, you want to make sure that Canada Goose is displayed in the right way that the way that you want to. Right. You don't want them to abuse your brand by pushing it in the corner or something like that. So that relationship is very important. So far, judging by the growth rate, I think they're doing a good job at maintaining that.
Yeah, I don't think it's the thing that I was concerned about when I read it, and I'm not that concerned about it, would be these suppliers that they have kind of handshake relationships in some ways.
Yeah.
If there's a problem with any one of them, I think one of their suppliers supplies about 20% of their goods, right? And if there is a shortage, or if that company decides, runs into financial trouble, what happens? How does that affect their business?
Yeah.
And so this is not something I would be like, oh, no, this is a hard write-off, right? Every company has some little holes here and there.
Yeah.
But I found it interesting because there's a potential there that they run into a problem with one of their suppliers.
Yeah.
So.
Yeah. And moving on to the next bullet point, within the relationship bracket, employees, which I thought was interesting, because we're dealing with manufacturing in Canada, we have to deal with our law, and their minimum wage went up in 2019, which is going to impact the bottom line. So that'll be interesting to see moving forward.
Yeah.
Because much of the manufacturing is done in Ontario, and that's going to, obviously they fall into this jurisdiction.
Yeah, and I think more so than even the costs there, if the regulatory environment is too restrictive.
Yeah.
Part of the reason that costs are cheaper in China is that China doesn't care about human beings, right? And so they are willing to make them work harder than is, what is deemed acceptable in the U.S. Yeah. So, and Vietnam even more so now than China. So that's part of the reason that because they have a freer regulatory structure, they're cheaper. So the only thing I would be wary of in this is that what happens if Canada has a problem with, like they slowly creep up on the regulation side of the house, that it causes a problem. Again, I don't think it's happening. I mean, these guys are selling a jacket for $1,000 and it costs them $250 to make, right? That's the gross margin there. So an extra few bucks on the labor side is probably not going to materially impact them. So, and this only applies to premium goods. You can't do this in a, lower end stuff.
Exactly.
Where you're trying to make it up in volume is not, you can't sell that kind of stuff and manufacture it here. So,
yeah. So that's the part one of Canada Goose. This was episode 37. We talked about we talked about a lot here. We talked about the competitive advantage all the way through their growth aspect of it, their relationship with customers and suppliers, capital investment. So this kind of wraps up our first portion of Canada Goose. We'll talk about the financial health management and ultimately the valuation on the next episode.
Yeah, so stay tuned to find out if they're cheap.
Stay tuned. Okay, I'll see you guys on the next episode. Thank you, guys.
Thanks.